ICT said that you can quit your job in 90 days if you simply implement this one strategy into your trading. Now, what is this strategy? ICT talks about it on his Instagram. I'm not gonna make you guys sit through and watch the whole vid as it is quite long. So for your guys' ease, I have made a whole slideshow on it and simplified it down to what is important and made it super easy for you guys to understand so you guys can start to implement this strategy and start to become financially free. Now in this video I have a step-by-step breakdown of the strategy. I'm also going to end the video off with live market examples on TradingView so you guys can see how I implement this strategy into the real market so you can begin to do the same. Now if you guys are serious about trading, make sure you watch this video to the end, and guys, if you could you please like the video? It greatly helps out the channel. So let's get into the video. Alright, so to start off with times and pairs, 9:30 a.m. to 11 a.m. New York time, 2:30 p.m. to 4 p.m. UK time, GMT time. Now, guys, this time window only means when you can place a trade. Now, one of the steps in the video is a liquidity sweep, for example. Now, I do say that the liquidity sweep does not have to happen in the trade window. The trade window is simply there to say when you can place a trade. I don't want you guys to be placing trades before the time window or after. So make sure it is within the time window. And as for pairs, EURUSD and GBPUSD, as they are dollar correlated, they work really well with this strategy, and any of the main indices such as US 30, NASDAQ 100 and SPX 500. Alright guys, I'm going to include a step-by-step breakdown for you guys. I'm going to go through each step in detail. However, this is a quick overview for you guys. Step 1, liquidity. Step 2, market structure shift with displacement. Step 3, fair value gap. Step 4, entry. Step 5, targets. So starting off with step 1, which is our liquidity. So we want to mark out buy side and sell side liquidity on the 3-minute or 5-minute. So we want to identify buy side and sell side liquidity for market to take out before 9:30. However, guys, you might want to observe after 9:30 if there is any other major levels of liquidity, as these are also valid for market to take out. Now guys, just a quick reminder, in all of my videos, if liquidity is taken to the downside, you want to buy. So in this case, liquidity is taken to the downside. As you can see, we have equal lows right here. Market takes to the downside. So now we'll be looking for buyers from here. If market were to take liquidity to the upside, we would sell. So in this case right here, say for example, would mark out buy side liquidity here, would mark out sell side liquidity here, for example. Wait for market to see what market takes out. If market takes out liquidity to the upside, we know we are looking for sells. If market takes out liquidity to the downside, we're looking for buyers. Now, there is no daily bias on this strategy, so whatever side market decides to take out liquidity, that's where we will decide if we are buying or selling. Now onto our step 2, which is our market structure shift. Now if you guys do not know what market structure shift is, you may know it as change of character. If you do not know that, do not worry guys, I'll explain it to you right now. Basically, market structure shift or change of character is basically a reversal pattern. It indicates that market is about to move in the opposite direction. Say for example, we are in fact bearish on the market, so this is a bearish trend. However, we do then form a, as you guys can see here, lower low, lower low, lower low, lower low, higher high, not higher low, higher low, higher low. So we're in a downtrend. However, market starts to form a lower high, and we do end up getting a higher high at some point. This is our market structure shift. As market shifts in structure, market changes of character, we get a change of momentum. Whereas we had all this downwards momentum, we're starting to get a shift in momentum towards the upside now. Let me just clear all this for you. So once we get a change in momentum, that's how we know it's a market structure shift. However, there is a couple criteria to a market structure shift. Firstly, we want a market structure shift with displacement. What does this mean? We want the body of the candle. We want a lot of volume in these candles. So you can see we want big candles closing above the swing high of the point in the market, over the high in the market or the lower low, whatever it is, whatever it may be in your scenario. You want the body of the candle to close above the high. Just to recap, market structure shift is a reversal pattern. You want a lot of volume in your candles. We call that displacement. As you can see right here, guys, we are moving up with a lot of volume, showing us that market does in fact want to start to move bullish in our scenario. Whereas before we were bearish, market does now show signs of bullishness, as we can see in these candles right here. Market does end up closing above a significant high right here. which shows us market does want to move bullish. It is a confirmation for us. It is an added confidence. So on to our step 3, fair value gap. This is quite simple. After you do get your market structure shift, you do want to look for the first available fair value gap that you do see. Now, this could be on the 1 minute, the 2 minute, the 3 minute, even in the 5 minute if you do find a valid fair value gap. However, you want it to be the extreme fair value gap, the first FVG that forms after the market structure shift. If there is not FVG, do not take the trade, guys. You want to only cherry pick the highest and best, most possible trades for you to take. Just to quickly overview what a fair value gap is, it is an inefficiency in the market when market does move too quick. As you can see right here, we have no wick right here. We have candle A, candle B, candle C. In the middle, that is our fair value gap between the high of candle A and the low of candle C in our case. So that is our fair value gap right here. What some people like to do, what I like to do, I like to mark out the 50% of the fair value gap and enter off there. So I will wait for market to come to around the 50%, around the halfway mark of the fair value gap, and fill in the halfway mark before I do enter. So moving on to entry now, we want to use a limit order to enter at the trade. Now, what is a limit order? As you know, if you are trading, we have instant execution where you simply place the trade and it executes straight away. We also have a limit order where if market reaches a certain price, the trade will be executed then. So this makes it really good for us to catch those sniper entries. So at the top of our fair value gap, or if you do want to enter the 50% mark, if you do want to minimize your risk a little bit, however, you may miss out on a few trades. So we want to place our limit order right above the fair value gap. We place it right above the fair value gap. As you know, there is spreads in trading, the stuff that could mess you up and market may not tap you in. So place your limit order right above the fair value gap so you get entered into the trade. We do this because we presume market is going to come back and fill this fair value gap before continuing in our desired direction, as we know from the market structure shift. Okay, now step 5, which is our targets. You want to target opposing liquidity or opposing order blocks. Now, opposing liquidity could be anything like equal highs, relative highs, trendline liquidity, whatever type of opposing significant liquidity you see in the market, that could be your take profit. Now, guys, I do recommend you partial, as partialing does very greatly minimize your risk and really helps you to secure profit, as sometimes market may not move the full 40 pips, 50 pips, 60 pips, whatever your final take profit is. As for stop loss, above or below the swing high or low. Now, in our case, our stop loss is below the swing low right here, the swing low. So we do give our trade a little bit of space to play out. We do not make it too tight like some people do, which they end up getting stopped out and the market continues in their desired direction and they miss out on the trade. Alright guys, I did give you a brief overview of the strategy. I hope you guys are familiar with it. Now I'm going to continue on to TradingView, where I'm going to show you how this strategy really does work and why it works so well. You guys are going to see on the real markets that this strategy happens so frequently. It's absolutely amazing. Now I'm going to also go through the steps again on the real market, and I'm going to explain each trade in detail. So let's get into it. Guys, I won't even take a minute of your time. However, if you are still not a funded trader and you want to get funded, I have an amazing opportunity for you guys. I will pass your funded challenge 100% guaranteed, or all your money back. Now, you do not pay a single penny until I get you funded. So it's absolutely zero risk for you. And if we do somehow fail your challenge, which we have never ever failed a challenge before, we will refund every single penny you paid us, plus every single penny you paid for the prop firm. So make sure you guys join the link. It will be join the group. It will be the first link in the description. I have so much proof of me passing people's accounts. How many more people do you want to see get funded every single day? People are changing their lives. People are making thousands of dollars in payouts. So what are you waiting for? Alright guys, before I do get into the main examples, I just want to quickly show you guys how this strategy does really work in the real market. So I'm on EURUSD currently, and as I am recording this video, I am live in the trade using the strategy. Now this is a 1 to 2.5 I am aiming for, and I'm going to quickly explain to you guys how I'm aiming for 46 pips on this trade, and I am currently up about 33. So I'm just going to quickly break this down for you. So we have had equal highs right here, which market has decided to take out to the upside. From there, we have gotten our market structure shift right here. As you can see, the body of this candle has closed below the swing low of this candle right here. So from here, we do get our balanced price range. Now, if you guys are unfamiliar with balanced price range, make sure you watch my last 2 videos, especially my silver bullet video where I do go in on balanced price range in detail. So as you can see here, a balanced price range is basically two overlapping fair value gaps, as you can see here. So we do get one fair value gap and we do get another, and the overlapping area, that is our balanced price range. And I do enter off this overlapping balanced price range, this double fair value gap, if you like to call it. And I did place my stop loss above the swing high right here at about 18 pips. Now, don't be scared to make your stop loss 18 pips. Guys, what you can do is go on the internet and search up for a lot size calculator and always risk 1% on your trades. That way, even if your stop loss was to be 40 pips, you would still lose 1% on your account. So, as for targets, I am targeting opposing liquidity. Maybe if I go on the 15-minute, it will be clearer for you guys. As you guys can see, there is a nice level of liquidity here, which I am targeting for about 47 pips. Now if I go back onto the 5-minute, you guys can see this trade is running very well. I've taken my first take profit right at this swing low right here, and second take profit is going to be right here. So you guys can check after the video how this trade went. So let's continue with the examples. Okay guys, so I'm on the NASDAQ currently, and I'm going to be breaking down the trade on how I caught a nice 1 to 2. So firstly, I'm going to start off by saying this trade took about, if I measure it, that's about from 11:15 to about 11:20. So we hit our first take profit super quickly. However, second take profit took us about a day. So that's just to make that clear. We did hold on this trade. However, we stuck with our plan, we stuck with our rules, and we did end up hitting for the final take profit at 1 to 2. So I'm going to firstly start off by removing all drawings off my chart, and I'm going to replay the market. So now I'm going to replay the market just so you guys can see my thought process. So starting off here before our kill zone, you want to identify any liquidity in the market. So what do I see? I see a nice level of equal highs, and I also see a nice level of equal lows right here. Now I'm waiting for market to take out either one to either direction. So if we play out market, we can see what market does, and market, lo and behold, we take out liquidity to the downside. So from here, we do know we are looking for buyers. So to start off, I'm going to now wait for my market structure shift. And which high do I want to be broken? I want this high to be broken right here, as this is, there we go. As you can see, we do get a break right here. However, it is not a clean market structure shift. As I tell you guys, you want to wait for a market structure shift with displacement. And this is clearly not displacement, as you can see right here. So in an example like this, I would go to the next significant high, which, say for example, is right here. Now, this is the significant high I am waiting for to be broken. So let's play out market again and see what market does. Now, as you can see, we very clearly do get that break. And this is a fantastic, a beautiful market structure shift. As you can see, the body of the candle closes above this significant high of this candle right here. So as you can see, market is changing in momentum. As you can see, we are starting to move bullish. So this shows us, this confirms to us that market does want to move bullish. Now we can start taking our entries from here. I'm going to wait for the first FVG that forms. So which we do very clearly get. Now from here, I'll simply mark up my fair value gap, which is right here. Now, if I do just replay the market to make it a little bit clearer, we don't have any other clear fair value gaps right here. You could go on the lower time frame and try confirm. However, I do not see any other clear fair value gaps now. From here, I'm simply going to set my limit order, place my stop loss below the swing low. And as for targets, I'm going to hop into the 15-minute for targets. And I want to target opposing liquidity, which I do see right here, first of all. So this is going to be my first take profit, second take profit right here. So now I am going to play out market just so you guys can see. Hold on, let me just mark out our take profit so it's a bit clearer for you. Take profit 2 and take profit 1. Okay. Boom, there you can see take profit 1 hit, smashed. And very shortly after, take profit 2 is hit now, as you guys can see. This is a sniper exit. This is an amazing trade. As you can see, the way we entered, we are in no drawdown, we're in zero drawdown, and the way we exit, we are absolutely maximizing our profits right here. So just a quick recap, guys. We had a liquidity sweep to the downside, so I know I was looking for buyers. From there, I got a market structure shift, signifying that market does want to change in direction. Market wants to start to move bullish. From here, I found my first FVG formed after the market structure shift, which I did enter off aggressive for when I did take my profits off opposing liquidity. It's as simple as that, guys. You can use this to make profits every single day in the market, guys. It's as simple as that. I don't know why people overcomplicate trading or strategies such as this. This is all you need to do and you can become profitable. So on to the next example. Alright guys, here's the final example on SPX 500, and I'm going to be showing you guys how I caught this amazing 1 to 6 trade in roughly about 1 or 2 hours. So to start off, I'm going to remove all drawings off my chart, and now I'm going to replay the market. Now as you guys can see, once I replay the market, I'm going to wait for market to take out liquidity. Now there is no proper clear liquidity such as equal highs or equal lows. You could argue there is some about like right here, however that's already been taken out. So if we play out market, we can clearly see we get a super strong candle. This could have been from news. Yep, 8:30 might have been news. So we do get liquidity taken out to the downside, so we want to start looking for buyers. Now if we do play out market, we want to wait for our market structure shift to show that market does want to reverse and start to move bullish. So we do very clearly get that, as you guys can see right here. As you can see, we do have a lot of momentum in these candles. As you can see, market is moving up with a lot of volume, and lo and behold, what do we get left behind? A fair value gap. Now as you can see, we do get our liquidity sweep, market structure shift. Market makes a market structure shift with displacement. As you can see, we get very big candles right here. So and we get a fair value gap left in the middle. From here, it's very simple. I'll simply place my entry, stop loss above the swing low, target opposing liquidity. Now if I hop onto the 10-minute time frame, you guys can begin to see opposing liquidity. Now for our final take profit, you could have placed it right here or right here. Say here, for example, this is a very nice equal highs which market be attracted to. Market is attracted to liquidity, as market does want to take out liquidity. That's why we place our take profits at liquidity levels or significant liquidity levels. Now to simply play out the trade, you can see we get a beautiful tap in. Market taps us in beautifully from our fair value gap. If I hop back onto the 2-minute just to make it a bit clearer for you guys, if I extend the fair value gap for you guys, you can see how market taps us in beautifully and market rejects off straight away, leaving us with no drawdown at all. So if I do play out the trade, you guys can begin to see how quickly we hit our take profit, and really how amazing this strategy is. You guys can really see the power of this strategy, and how if you implement a time-based trading strategy along with a few couple of rules, you can really quit your job in 90 days, guys. What ICT says is not lies. This could not be further from the truth. So if you did enjoy today's video, please drop me a subscribe and please like the video as well. Thank you guys so much for watching, and I'll see you guys next time.